Hey, what's up everybody? Today is Tuesday, July 7th, and today I'm going to be talking about the treatment of the PPP and the EIDL in terms of taxes, and also how to account for both of these loan and grant programs in your books. But first, if you haven't done so already, and if you're new here, please subscribe to my channel. I would really appreciate it. And also smash that like button when you have a moment. And also leave some questions in the comments below, and I'll do my best to answer them for you. All right. So start off with the PPP, how the tax treatment is, and how to account for it on your books. All right. So when you first get the loan, you get some money in your bank. So when you get the money in the bank, obviously you receive cash, right? So the other side to that, if you know accounting at all, there's a debit and the credit side. So debit would be the cash side. The other side to it, you would want to put it in what's called a current liability type of account. And it's a current liability, and you're asking, Ryan, why is it a current liability if it's paid back in 5 years? So if you don't know, there's current and long-term liabilities. So current liabilities are resolved in 1 year or less, and long-term liabilities are resolved over 1 year. So why are we putting this in current liability if it's a 5-year loan technically? First of all, it's a 5-year loan, but it may be forgiven. Okay, so there's this contingency there that says we might be able to get this loan forgiven within 10 months or, within 10 months. So that's why we're putting it in current liability. Once you apply for the loan to be forgiven, and if it's accepted and approved to be forgiven, then we will do some reclasses, which I'll talk about right now. So let's say you have a $10,000 PPP loan and you put it in current liability, and then like 8 weeks from now, you applied for forgiveness and you got it approved, and now your loan is forgiven. You don't have to pay it back. So what you do then, if you got the full $10,000 forgiven, you're basically going to reclass that loan, that current liability, to a non-deductible expense account. And this is a account that you might have to create, whether you're using QuickBooks or Xero or whatever. You want to create a new account that's called Non-Deductible Ppp Expenses. Why are we making just a general non-deductible expense account? Well, because basically, if you got your PPP forgiven, that means that you used it properly for the expenses that you should have been using it for, which is why you were approved for it to be forgiven in the first place. So, let's say you use the whole $10,000 for payroll. A common thing that you might think that you should do is reduce the payroll expense by $10,000, since the forgiven PPP loan is not tax deductible. So your first thought would be to just reduce your payroll expenses, but I'll tell you why you shouldn't do that later on in this video. So what you want to do is just create an account called Non-Deductible Ppp Expenses and reclassify the current liability to that account. And just so if you're not following, I just want to remind you that any expenses that you pay with the PPP is not deductible at the moment. That's why we're creating this account. And we're doing it so that when you give your financial statements to your tax preparer at the end of the year, they know to include that as a non-deductible item on your tax return. And so just to be clear, that line item will show up as a negative expense. So don't be worried if it does, when you're trying to reclass it. It should show up as a negative expense because it's non-deductible. It's offsetting your other expenses. Okay, does that make sense? Could be going a little fast for you guys if you're not really well versed in accounting, but definitely let me know if you have any questions about this. All right. So let's say you got a portion of the loan forgiven. Let's say you got $8,000 forgiven, $2,000 you were not able to get forgiven because you used it on candy. So $8,000 you would move to the non-deductible PPP expense account. The other $2,000 you would move to your long-term liability account. Now it's long-term because now you pay it off in either 2 years or 5 years, whatever you elect. But it's greater than 1 year, so now it's a long-term liability. And so now any payments you make to it will be split into principal and interest, obviously. So the principal portion would directly reduce that long-term liability amount of $2,000, and the interest portion is an expense that goes on your P&L, on your profit and loss statement. The way you determine that split, you would have to use what's called an amortization table based on your loan amounts, based on the interest rate, and based on the term, okay? You can find those all over the internet. So I won't get into much detail for that. The amortization table and the payment splitting can get confusing, so definitely reach out if you need help with that as well, but that's not for, down the road. Hopefully we're clear on the PPP and how it's handled. For expense tracking for the PPP, I would just track it like normal, okay? Don't do anything different in your books. If you had your PPP in a separate checking account, that was good for forgiveness, to prove forgiveness, to solidify what you paid for with the PPP. For expense tracking, you don't do anything different. If you're using QuickBooks or Xero or some other accounting software, keep doing that. If you want to keep in a separate spreadsheet or something the expenses that you paid with the PPP, you may do that as well. I mean, just whatever you want to do as long as you can substantiate it, all right? So don't change anything there. And one reason why I don't want you reducing your actual expense account by the PPP funds that you use to pay for it is this. So let's say you use a PPP to pay for salary. Your 10,000 PPP that I mentioned earlier, you use it to pay for salary, and let's say your salary for the year is $50,000. Well, if you're trying to budget for next year, if you're trying to plan for next year, you want to see that you actually paid $50,000 in salary when you're looking at your financial statements. If you reduce that number on your financial statements by $10,000, you're going to see just $40,000. And you're going to throw off your budget, most likely, okay? I mean, maybe you'll remember that you used the PPP on it and you remember that you reduced by $10,000. But the less remembering you have to do and the more you can just look at some shit on your paper, on your profit and loss statement and just see, the better. And then the second reason, and I'm going to nerd out here real quick, and I hope that you've joined me, is the Qbi deduction. Now, if you don't know about that, don't worry, you've most likely already been taking advantage of it. It's the new deduction that was put into place by the Trump tax reform. It's what you hear, that's the 20% deduction for pass-through business entities like sole proprietors, LLCs, partnerships, and S-corps. You get a 20% deduction based on your net income. And that deduction is limited based on your AGI if you're a certain type of business, okay? So that limitation can be based on salaries paid in your company. So if you're reducing the amount of salaries paid or the reported salaries paid, that's going to affect the limitation of your QBI deduction, okay? And you don't want to do that. That QBI deduction is good for you. You don't want to further limit your QBI deduction. That's why we're putting the forgiven PPP amount in just a separate expense account altogether. It's going to show up as a negative expense, but that's okay because you're going to have your full wages reported, you're going to have your full rents reported on your financial statements, all right? Hope you're still following along. Hopefully you're not tuning out by now because now we're going to talk about the EIDL, which is also really important. It's a little more simple than the PPP, actually a lot more simple. But important to note regardless. So first we'll talk about the EIDL loan. Okay, you receive the loan, it's going to be a long-term liability, okay, because there's no tricky or funny business here. It's a straight up 30-year loan. So when you get it, you're gonna debit cash, you're gonna credit long-term liability, and it's gonna stay there until you start making payments. Same with the PPP. Your payment's going to be partially principal and partially interest, and the principal portion is going to reduce the long-term liability account by the principal portion, and the interest portion will just go straight on your P&L. Simple there. It's just a long-term liability, and when you make payments on it, you just account for the payments in that way. So the EIDL grant, I get questions on whether or not it's taxable, and the EIDL grant is a taxable item. Slightly different from the PPP, where the PPP is not taxable income, but the expenses that you pay with the PPP is not deductible. The grant is a little different. The grant is just considered a taxable income. I know in the end it shakes out to be the same thing, but the way that you report it is just different. So when you receive the grant, you're going to get cash in your bank, debit to cash. Okay, let's say it's $1,000. Debit $1,000 to your cash account. The credit side would just be other income. It's just gonna be other income, other EIDL grants income, or whatever you want to call it. It will be in an income or revenue account. If you want to go a little deeper, if you want to get into more detail, this grant is not part of your operations, so it should fall below your operating income on your income statement, on your profit and loss. Okay, that's for you more advanced users. If you care about that, that's just where it should go, because it's not part of your day-to-day operations. It should go below the line. Okay, other income. To answer many of your questions, the EIDL grant is taxable. Okay, the EIDL loan is not taxable, and the expenses that you use to pay with the EIDL loan are still deductible, because you still have to pay back the EIDL loan. Okay, the loan itself is not income. The expenses that you pay with it are still deductible, which means the loan is just a loan. You receive money, you're going to pay it back. All right, that's why it's a liability, and that's why we account for it that way. All right, hope that's clear. I'm going to read some questions from some of my past videos, hopefully clear some things up. Let's see, Henry Braxton asks, does getting a 1K grant affect getting or not getting a stimulus in August? No, getting the 1K SBA grant will not affect that at all. Zorba asks, hi, I'm a self-employed full-time Uber driver. I got the $20,500 EIDL loan, but what is the process of getting the grant? Is there any way I can apply for the PPP loan? Thanks a lot. So there's no other process to getting the grants. If you just got your loan, just wait a little longer, your grant will come. All right. And then, is there any way I can apply for the PPP loan? Yes, you can actually. Since they just extended the deadline for applications until August 8th, you can apply for the PPP. Check out some fintech companies. I would first maybe recommend checking out a local bank, since I have a nationwide audience. I have a bank here in Colorado that I really trust, Vectra Bank. If you have one of those branches in your state, definitely check them out. They're killing it. All right. But if your local banks can't help you, check out bluevine.com or cabbage.com, cabbage with a K. Okay, Abe asks, if I got the SBA loan, can I still apply for the PPP loan? And the answer is yes, you can. You can apply for both. But keep in mind, if you have the grant, the EIDL grants, then it's going to reduce your PPP forgiveness amounts. All right, just keep that in mind. And then L. Whale asks, should I report the EIDL grant on my PUA? And I want to say no. You don't have to do that, because the EIDL grant is not like payroll specific. You can use that grant for any other operating expenses. So no, you don't have to report that on your PUA. All right, that's all I got for today. Thanks so much for joining me. If you haven't done so already, please hit that subscribe button and please smash that like button. I would really appreciate it. I'll see you guys tomorrow. Take care for now.